little bit about our speaker today, Adam Lewenberg. He is the president of Postal Advocate Inc., the only mail audit and recovery firm in the U.S. and Canada. We manage a portfolio of just under 100,000 pieces of mailing equipment for the largest U.S. companies. He speaks and teaches nationally on mail savings and industry trends. He is the former industry co-chair for the Boston Postal Customer Council, and he is a member of the Mailing Systems Management Association. He has certifications in CMDSS and MDC. He's a feature writer for the Mailing Systems Technology magazine, and he also worked for one of the largest mailing vendors for over 18 years as the director of national sales for pre-sort, tabletop inserters, addressing, hardware, software, and green offerings. He was one of the top 5 account managers nationally, working with some of the nation's top accounts. Postal Advocate is not affiliated with any mailing vendor, so we offer unbiased advice. Over to you, Adam.
Thank you, Doris. So we're going to talk about the new lease accounting standards, and are you ready for the deadline? So we're going to talk about what's happening in this space. We're not accountants. We're going to give you the overview of the rules and what you're going to need to comply. If there are specific questions, you probably want to go to your finance or accounting group. Just make sure that you're in line with how they need to process. Okay. The big deal about what's happening, just to give you a quick high-level overview, is how you recognize leases. And what these new requirements are doing is they're making you record your leases on the balance sheet as opposed to just the income statement, which means that companies are going to need a much higher level of visibility to their lease portfolios than they've had in the past. And so we're going to talk about what that means, how you need to get that information, and then we're going to focus a lot on how do you gain visibility to the details of your leases. Okay, so we're going to go through that detail, and then we'll open it up at the end for questions. So today we're going to cover, when is this effective date? What are those things that are changing? What do you need to do to comply? Why is this important? Like, why do you care? What information are you going to need to do to provide? And this is the focus is how do you get this information so you can comply with these changes? How do you get this visibility? What are some best practices? And then how we can help. So I want you to know everything that we're going to talk about today you can do on your own. If you need a third party to help you, there are some reasons why we think we add some value in this area, especially around mailing equipment. So an overview of the changes. So there's 2 basic types of leases for you to think about. There's finance leases and then there's operating leases. Most equipment leases today are operating leases. The big difference is there a fixed buyout amount? And do you assume that you're going to own that asset at the end of the lease? That really puts it into a finance lease. An operating lease is where there isn't a buyout that's clearly defined. So let's say you lease a piece of mailing equipment and it's $300 a month. Well, at the end of that lease, you can either continue just making payments on that lease, or you can turn that equipment in and then the vendor can release that asset to somebody else. So that qualifies it as an operating lease. So the Financial Accounting Standards Board has established these new rules, ASC 842, to require companies to record operating leases on the balance sheet as a liability versus only declaring the expense on the income statement. So in the past, finance leases always were recorded on the balance sheet as a liability. The new requirement is that operating leases, and the majority of office equipment that's out there in the industry, whether it's mailing equipment, copiers, things like that, are operating leases. So it must include a full discounted value of the remaining lease obligations, and we'll get into that detail in a second, on the balance sheet. Public companies start on December 15th of this year. Non-public companies start 12/15 of 2019. But the biggest piece is it will require that you have full visibility to all leases, and all leases with over 12 months in duration. So it could be that you have, you have leases that, and it usually leases already go between 12 months and let's say 60 or 70 months. There also could comply to, let's say you have a rental, like in some of the mailing vendors will do 36-month rentals. Well, because it's an over a 12-month commitment, that could qualify you as having to record that as a lease because it's over a 12-month commitment. So you'd want to talk to your finance department about that. So let's give an example. So we have a mailing equipment lease that's $200 a month for 48 months, and there's 36 months remaining on that lease. So in the past, that got recorded typically in someone's sales and general administration line or in some line, on the expense item. And so that $2,400 a year gets recorded here, and that would be it. So companies didn't really care that they had complete visibility to all their leases because they knew that, in the accounts payable ledger, all the expenses were going there, and those would all get flowed to the sales and general administration expense or some category in their expense category. So they didn't really need to get full visibility to that lease. The new requirement says that there's 36 months left in that lease, which means there's $7,200 that's the remaining balance of that lease. And that has to be recorded in long-term liabilities for your company. And the reason they're doing this is when they have the reason that the financial advisory boards are doing this and they're coming up with these standards is, let's say you have two companies. One company purchases all their equipment. They don't lease anything. And another company leases all their equipment. Well, today, if you look at the balance sheets of those two organizations, they might look similar. But the company that leases all of their equipment is going to have a lot more lease liabilities, long-term liabilities, than is indicated today in their balance sheets. So the goal is to sort of standardize the view of the balance sheet so you can compare companies on an apples-to-apples basis, which you couldn't before because all those leases only showed up on the income statement. So that's what's going on. So what do you need to do? So first, don't delay. These requirements are coming up on a quick time frame. Engage your key stakeholders. So you have people in procurement, accounts payable, real estate, legal, finance that you may have to engage to make sure that you can comply with these regulations. Take an inventory. Get a handle of your lease portfolio. That sounds obvious, but as we go through this, you're going to see why it's a little bit harder than you think. A lot of companies we're working with are looking at putting in a spend management system. We don't represent any spend management companies. We don't have any advice on who to use, but a lot of our clients are, starting relationships with spend management companies so they can manage this lease portfolio for the future and that they can do the recording that they need to and plan for the future. So this is a quote that we found in some studies. A lot of companies, have underestimated the work required, and a lot of companies haven't, they're not ready for these requirements. Almost 1/4, 23% of companies surveyed in a May 2017 by PwC and commercial real estate services firm CBRE said they hadn't started their lease accounting adoption efforts yet. A Deloitte survey showed 31.4% of executives polled said their organizations were unprepared to comply with these new standards. So a lot of organizations haven't gotten this complete visibility yet to be able to comply. Why is this important? It's important for a couple of reasons. Organizations need oversight of their lease portfolios. They need to be able to comply with these standards so they can meet the financial requirements. But also, by having this increased oversight of your lease populations, you can make better decisions for the future. But you'll need to have a much higher level of visibility than you've had in the past. Companies are going to have to keep the records in order to comply with these standards. So there are a lot of challenges in getting this visibility. So we're going to talk about what those are and what things you need to sort of tackle. So it's very difficult to get full visibility to the mailing category because of the following. Now, we're going to focus on the mailing category. This may be the same if you're dealing with copiers or other pieces of office equipment that you may lease, but we're going to focus primarily on the mailing equipment category because that's what we do every day. So the mailing vendors typically do not offer consistent reports. So whether we have many organizations that have never had a report on their spend provided from the vendors, they don't get them frequently, they're not detailed, they're missing certain pieces of information. So even if you have copies of your lease agreements, we go to some companies that say, well, look, I have copies of my leases, but you can't use the copies of your leases for a couple of reasons. One, the date the lease was signed is typically different from the commencement date of the lease. So you may have a lease that was signed on January 1st of 2018. That lease, based on the renewal that you did from the previous lease, might not go into effect for anywhere between 2 and 12 months from the date you signed the lease, based on what was the terms of the previous agreement. Also, the lease copies don't give you the details of the model, serial numbers, and a bunch of other information that you're going to need to comply. End of lease dates are not shown on any invoice from any vendor in the mailing industry. So I don't care who the vendor is, you cannot go to an invoice and see when your lease expires. Many companies have decentralized purchasing, where the locations, divisions, or regions are acting independently and signing their own mailing agreements, making it difficult to sort of, rein everything in. A lot of larger organizations we work with have had mergers, acquisitions, divestitures, and, the question is, when you merge in a company, did you get visibility to their entire portfolio? And oftentimes, they were never merged in properly. There could be multiple mailing vendors used throughout the locations, making it difficult. So we find a lot of companies, maybe they have Pitney Bowes or Neopost as their core vendor, but then for their field locations or those mergers or those miscellaneous sites have gone rogue and done their own thing with, with Francotype Postalia or one of the other two. So, and then there are some questionable mailing equipment vendor renewal practices that extend your obligations. So, and this is what you need to watch out for and try to control. And we recommend as a practice is to control this process to a standardized renewal process. So we find that there are vendors that try to get locations to renew early without properly disclosing end of lease dates, or offering special incentives to renew early by clicking on an email, or offering gift cards, or renew now by paying this invoice at a 10% discount without disclosing the end of lease dates. Getting people to renew where they didn't really know that they were signing up, or the wrong people were not the ones that were signing. Maybe it was an office manager or someone in accounts payable versus someone who has the authority to sign that agreement. Or automatic evergreen extensions if new agreements aren't put in place 30 to 90 days prior to the end. And this is one of the biggest issues about this lease reporting is if you don't renew a lease or tell the vendor what you're going to do, many leases in the mailing industry have automatic 12-month extensions that say, if you don't let us know 30 to 90 days prior, we're going to extend your lease another year. So your end of lease date now goes from January 10th, 2018 to January 10th, 2019, changing your lease obligations that you have to report on. So what information do you need to provide? So for all your leases, you need this level of detail. You need to know the lease number, the location address, the term for that lease, it's a 36-month term, the monthly amount, you're spending $212.58, the commencement date of that lease, and the end of lease date, as well as what items are included in that agreement. What is the models and serial numbers that make that up? At least what is a main model and serial number that makes up that particular piece of equipment that you're leasing? And that can be tricky because sometimes when you look on if you are lucky enough to get population reports, there might be 8 items that make up that particular mail machine that you have. And the same will fall through in other industries. So we're finding that our companies are investing in these spend management systems and they're asking us to provide this level of data. And this is how we know that this is the detail that you need to comply with. How do you get this visibility? So first and foremost, you want to reach out to your mailing vendors to see what reports they have available and what information they can provide. Next, you want to go to accounts payable and see what bills were paid to mailing equipment vendors. And this would be true of all categories, but what bills have you paid to Pitney Bowes, to Neopost, to Francotype Postalia? Then you'd want to know, not only, you'd have to know some of the sub-names they might fall under, because in some people's accounts payable system, it might be under Neopost, but the leases for Neopost are under Mail Finance. So you have to make sure that you're looking up the names that represent those different mailing vendors. Set up a login on the mailing vendors' websites so you can get a higher level of visibility to what's going on at that site. So you can see more details on the invoice, maybe you could see some serial numbers, maybe you could see some end of lease dates, maybe you could figure out postage usage and utilizations. The vendors' websites have a lot of good information that you can use. Then reach out to the vendors to validate anything that you can't figure out an end of lease date. And then the other key thing is you're going to have to keep this information updated when contracts change. So most larger organizations have leases that are staggered. In other words, let's say there's 100 locations with leases. They don't all start on January 1st, 2018 and end 4 years later. Usually there's staggered. There's 10 this year, 15 next year, 20 the year before, 5 the year after. And so it's important that you need a system to keep this information updated as the changes happen. Best practices. Have leases reviewed and renewed, at least reviewed, but hopefully renewed centrally versus being approved throughout your location. So this assures that there's some sort of visibility and oversight, that people aren't just going rogue signing their own leases. Ask your vendors about rental and purchase options before committing to a lease. So the purpose of this whole exercise is to make sure that if you're signing a lease, that it's a good business decision for your organization. So you want to see, are there purchase options? Does anybody compare the purchase price versus a lease price? Are there rental options that could be considered? Work with your finance department to make sure leases comply with the company standards. So we have some accounts that say, look, I need to make sure that any lease that we're doing is, 98% of the purchase price that we could have gotten on our own to make sure that it complies with our company standards. Every company has their own rules. Review the terms and conditions of your agreements. You want to make sure that there's no evergreen clauses on your agreements that bind you to an extra term beyond the end of lease. And even if you can't change the terms and conditions, you want to make sure you have something in your calendars to make sure that if there is a lease that's expiring, that you can act by a certain date to make sure that you don't auto-extend it. And then set up a process to manage this portfolio to make sure you're capturing the most up-to-date information. So it might seem a little overwhelming, but it doesn't have to be difficult if you set up a process and an ongoing way to manage it. If you have this level of visibility, there's a lot of additional benefits. So we're finding when we provide this level of visibility to our clients, we get 30 to 70% equipment savings, because people see that if they have a site that's spending, $300 a month on equipment, but only doing $100 a month in postage, that they're spending $3 on equipment for every dollar of postage they run, which is clearly out of balance. So by having visibility to all this, they can make better decisions. When you have visibility, you see, are you paying fees? Are you being billed at the wrong amounts where you're having overcharges, and you can see it? And you also get to see potential lost postage accounts from return meters. So what we find is that, let's say you have an office in Des Moines, Iowa, and that office returns their meter, changes meter vendors, the office closes, maybe the office manager is no longer there, something changed that happens. The postage meter holds money, it acts like a bank. And not only does the postage meter hold money, there's a prepaid or an advance account from the mailing vendor that you're using to fund that meter. So you're sending in a check to that account, and then from that account, it pulls right into the meter, or you're borrowing money from the vendor that goes into an advance account like a credit card. When a meter gets turned in, there's money that goes into the meter that goes into one of those postage accounts, the prepaid or the advance account. Did anybody think to go know the balances of all those accounts and then go fill out the postage refund request forms online to get their money back? And we found millions of dollars for our accounts in these postage meter accounts that nobody asked for the money back. So if you have the visibility, you can manage that. And by having a process for this, it creates a much simpler future management of the portfolio. So if you need help from the experts, this is what we do all day. This is what we're managing for our clients. We've saved our clients over $38 million. And what we're the most proud of is our average client savings has been 60%. So what someone was paying before to what they're paying after with the new transactions are 60% less. And our average client savings has been about $1 million. We're managing about 98,000 pieces of mailing equipment, and we've also helped recover about $10 million in lost postage, vendor fees, and overcharges like we discussed. And everyone on our team came from this industry, and we have over 235 years of experience. So what we do is, for any client, we offer to do a no-cost analysis. So in other words, we'll pull all this data for you together at no cost. We'll build you this visibility reporting that you need to comply with your lease standards at no cost, so we can show you the value that we can offer. Most of our organizations are large companies, and if we don't show this stuff up front, they can't make a good decision that we're a good partner. So all we need from that is a limited agency, or a one-page document that says that you're giving us authority to look at your mailing equipment expenses, and you provide us any reports you have, whether it's accounts payable reports or if you've gotten reports from the vendor in the past. Then we will build you a complete report and analyze the spends. And then from that, we'll show you what savings opportunities are available. And from there, if you want us to move forward, then we'll claim those credit requests and fees. We'll help you negotiate pricing, create a catalog, and then most importantly, we'll manage the day-to-day renewal population. So we'll make sure that the sites are contacted, that equipment's right-sized, unused equipment's terminated, and that all of this is reported in a certain way that it's easy to manage. We present all savings to you for approval, and we provide a web dashboard, which will show you a quick view in a second, so you can see what's going on an ongoing basis. And we provide ongoing support because most people's portfolios renew over time. The majority of our accounts are on a contingency basis, which means if we don't save you money, we're free. And it's only based on savings that we can prove having implemented. So what we do, what our steps from a visibility perspective is, you give us any raw data you have. So do you have a population report, or do you have an inventory report from any equipment? If not, do you have any accounts payable transactions that we could look at? From that, We'll work with the vendors, enter information on the vendor's website, collect postage volumes, fill in any information that's needed. We'll consolidate this into a central inventory. We'll add end of lease dates, postage volumes, lease spends, fees, spend ratios to give you complete visibility to what's going on. And then we'll do an analysis of it to show you where are the savings opportunities inside this that you can get. And then we'll give you a full savings summary that shows, what are the savings today and in the future, and which is average, 60% for our clients. We provide everything in a web dashboard so you can log in on your computer and you can see what are my spends across all my locations for lease spends, meter rentals, fees, maintenance, total expense, postage with graphs, as well as what vendors you're using. And then we'll give you visibility so you can see where are your locations, when do leases expire, meter rentals, maintenance fees, how much postage am I using at every site, and what's our status on that. And then if we need to go to a location, we can go to the location and we can see a higher level of detail. So as an example, this site spends $453 a month on equipment to do $167 in postage. So they have a spend ratio of 2.72, which means they spend $2.72 on equipment for every dollar of postage. Clearly, there's some right sizing opportunity. The right ratio should be 0.5 or lower. So someone who spends $100 on equipment, $100 in postage should spend $50 on equipment. With these types of ratio systems, we get to see the full detail of what's going on across the portfolio and then dive in to what's going on at any site. So as a summary, the effective date of this change is December 15th, 2018 for public companies, December 15th, 2019 for private companies. We recommend to get started, take inventory of what's out there. Put together a team of stakeholders to work through this process. If you're going to try to pull all this information together on your own, you're going to need to involve people from different departments. Get visibility to all your leases and create a process that works for the future. And if you need it, you can get help from the experts. We're happy to help you pull together a view of what's going on inside your organization and show you what savings are available and to provide you this visibility that you're going to need for the future. And if needed, we can certainly help you maintain that level of visibility so you can comply with these regulations.